This one, and we're showing you about breaker blocks. But yeah, first of all, they're basically it's an order block that's basically failed. So yeah, order block that's prices. Let's say it's a bullish order block. Prices come back below and closed through the order block like with momentum. Let me just find a couple examples. Let's go on this little level price here. So if you have a look, at, for example, here. As you can see, price is put in an order block here. Yeah, this is the order block. And basically, price has come down, it's respected it, it's respected the order block, but it's then retraced back up a little bit and it's pushed through, making it a breaker block. And as you can see, price has slowly come back up and it's respected it. So here would be support, it's broken through, now this is resistance. Do you get what I'm saying? And that's gone lower. I mean, even here, price put in another bullish order block and it's just completely being disrespected. And if you look to the right, price has come up back up to here, to this level, to the breaker block, and you, as you can see, price has come way lower. So another example. Yeah, right here. So look, as we can all agree, this is the order block. So this would be the order block in it, but as it's been disrespected, it's now a breaker block. You'd mark out the low, this low here. So like, yeah, this low here, this from the top of the order block to sort of the low that was closed below. Yeah, you'd mark it out like that. And if you do look to the right, you can see that once again price has, I mean, it didn't touch it, but yeah, price has come visit here. I mean, yeah, look, even here, hasn't even closed above it. Price has come down here, come up to here, and then yeah, look at the sell-off. I mean, now when it comes to entry, when's this? 9th, 10th of April. Yeah, I don't think I can even go back that far on a 5 minute. Well, that's a shame. Let's look for another example. Yeah, I mean, like, just here for example. Isn't the best example, but you have to go with it for now. You lot, after watching this video, you need to go back, go and practice yourself, go on TradingView, go mark out some breaker blocks, some order blocks first of all, and then ones that have been disrespected. And if you do get stuck, either come back and watch this video or go look at other videos, or leave a comment on what you're not sure on. But yeah, as you can see, it's failed and it's come back up twice, and then it's gone lower. What the fig? No. What is it today like? Nothing wants to just How far back was I again? April 6th. Right, let's just go with a 15 minute, because, yeah, why not? Now, what can we see here? So after it's broke through, we've got this low here. Now, after coming back up to revisit, first of all, it's left equal highs, and second of all, after leaving those equal highs, prices struggled to come back below this low. We have a bit of a gap here, but I think that's a new week opening gap, but let's ignore that for now. And prices come up again, sweeping these highs. Now, there's no clear signs of a market structure shift yet. On another time frame there'll be a gap here, but so prices expect this, come back up, sweat this high for a second time. This is why you gotta be so sure, like, to be entering trades. You need a clear market structure shift. Now, when you come up to a key level, and that first high, this I wouldn't really count this as coming back up to this key level. So here, for example, I always like to wait till that first high or low that has hit come into the key level to be swept a second time. You have to be a bit subjective, because you need to see how price reacts and wait for that first displacement. Now, as you can see, price didn't really displace past any major lows. You got this low, but yeah, like a low like this or a low like this one. So as you can see, price has swept up this high, came back up and swept this high. Now, what we've done, we've displaced past this low, even this low. It's a market structure shift. And now you want to be looking for sells. First of all, since we're only looking at a 15-minute time frame for this example, you got FEG here. Now, price has tapped into here. See how it has tapped in for entry. Now, you could simply keep it simple, enter there, put a stop loss at this high, and target this low. That's a 1 to 5. Or you can target this low, as it is a swing low inside a fair value gap. Yeah, you get the point, you get the gist of it. Or, as you can see, it has tapped into this untapped, unmitigated 15-minute gap. Now, you see this leg here. I'm sure if you went down to the 3-minute, 5-minute, 3-minute, or even the 1 minute, anything around there will be a obvious fair value gap in this manipulation leg that has tapped into because on different time frames, on another time frame, there will be a bit of consolidation here and then manipulate to the upside to tap into this 15-minute gap. Now, on a lower time frame, there will be a gap here, and you can wait for a close back below here to then enter, put a high at this high, or whatever, and then target even this low or lower. Or you can wait for price to tap back up, tap back into the IFEG, because it's inverted fair value gap, and you get the point. But that is literally it. Breaker blocks are very simple. Not many people use. I don't know. I've never really used them or pay attention to them personally. They're very good to point out, it's good to mark out on a chart to keep an eye on, and remember the market structure shifts and just order flow. I don't like using the word order flow because it's not really order flow. Order flow is when you're literally looking at, I can't remember what it's specifically called, but the thing where it shows you the orders some traders use. I can't remember what it's called, but yeah, real order flow isn't just marking out highs and lows and market structure shifts and trend basically. But yeah, I think that is it.